The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, everybody, welcome to the Diagnostic Trading Hour. And we got a few things going on today, but the market looks like it's up 0.77% on the S&P. You got a 0.91% rise on the Russell, 1.4% on the NASDAQ, and a 0.92% up move on the Dow. The euro dollar is moving quite a bit, and we got several different trades setting up, and I want to go over quite a few things with you today. As you know, on this show, we like to go over different ways that you can maximize leverage and minimize risk using the Nadex platform. And if you haven't used the Nadex platform, you definitely want to hop over there today and check that out. And if you have any questions today, just feel free to give me a call on the customer line there. And you can always find that on our show. You just click on Listen Live right here, and you can see 1-877-927-6648. And international, you can call in at 727-445-1044. Now, if you haven't got a Nadex account, just like I said, hop on TFNN.com. On the right side, you're going to see a banner that says Nadex. Click on that banner, and you can hop over here. You can click Create Account, and you can go down and click on the Test Drive button, open a demo account. Literally takes, 15 seconds, 30 seconds, and fill in your username, first name, last name, phone and email address, hit Apply for Demo. You'll immediately get an email sent to you that will give you the password to be able to log into your account. After you've done that, you'll be able to log in. And when you log into the account, this is basically how it's going to look. You're going to get right in there, and you're going to have access to $25,000 in demo funny money. So you can go in and you actually start placing trades and doing examples. And you can go in here and you can trade a variety of different markets, and we go over those on different shows. And what I want to do today is go over some of just the diagnostic trading information, some setups, some things that are happening in the market, and just bring some correlations to mind, things that are really important on key levels. And in diagnostic trading, there's really four main areas. There's the fundamental, the seasonal, the technical, and the statistical edges that you're looking for. And the idea behind diagnostic trading is to see where other traders are placing their trades, or why would they place trades at a price level based on a certain reason, and how can you take advantage of that? How can you get in before they get in? How can you get out before they get out? So that way, instead of following the crowd, you're sort of anticipating the crowd, not by simply anticipating the market, but by looking at, it's not simply about a squiggly line. It's about what orders are people going to place in the market. And to do that, of course, we do look at charts. We do look at fundamentals. We look at a lot of different things. But what do we look at that is going to help us do that? So what I want to do is pull up a few things, like on the diamonds right here. And whether you're looking at the Dow Jones or whether you're looking at the Wall Street 30 on Nadex, or whether you're just looking at the diamond ETFs. There's a lot of different things that you can compare. And if we back out and check out whether it be the diamonds, also we can look at IWM. And I'm going to break this down to daily. It'll help out a little bit more. Got it up on the weekly chart. And let's see here. And we're going to go and we're going to pull back several years of data on this for us. So let's go ahead and pull in. We'll just do 5,000 days. Pull it up. It's always good to make sure you're looking at all your historical information. Checking that out. And one thing I want you to note, if you haven't already noted, is that, of course, and this is occurring across many of the indices, but the Dow Jones right now is trading right at basically the last peak it just had, and the put-call ratio got really high, and it sold off really quick. Also, this is a major support resistance level. As you can see, it was a resistance level right here that it had to hit against, failed. It barely broke above it. Came back down to it, let it use a little bit of a support level, dropped below it, bounced at it, went back up, and then finally broke it. Another key level, and this is, I think, a great correlation for you to check out, is right back here. We're basically seeing the same level happen right in this area. And not only did we see it in May before the big sell-off, but we also saw it last July, before the big sell-off. And we can see that even more if we go back and we'll look over at the spiders, which is the S&P 500 ETFs. And if we go again, check this out over here, and we can see that it was basically coming up and peaking up right before we had the big sell-off near the end of the month. Now, what would cause, this big sell-off? Well, the same thing that caused it last year. We went to that, basically last-minute cycle on the debt ceiling debate. And, everybody knows the ultimate outcome. I don't even know why there's a debate. I mean, I guess I do know why there's a debate. It's politics, right? But there's really, come on. Nobody's going to come to an agreement. So we know what the Republicans want is to, of course, they don't want to raise taxes. I'm all in favor of that. They also, they want to cut government spending. All in favor of that. That's great. Democrats want to raise taxes, and they want to increase spending. So, both sides had their arguments. Neither side is going to agree, and basically we're in a stalemate. And everybody knows we're in a stalemate, and there's no chance of really getting out of that stalemate. We know that just looking at the last 2 years. No side is going to waver. So really they're just going to have to end up going to the very end and saying, okay, in 1 year, basically whoever's elected is going to get to choose. The Democrats, of course, are very afraid of, losing this. They already lost the House. They have a very slim chance of getting control of that. It wouldn't take too much for them to lose control of the Senate. And, of course, with Romney starting to outspend Obama, there is fear, of course, on their side that he actually may gain. And he'll actually be the first presidential nominee to outspend the incumbent president on election funding. So for the money being spent on helping get him, elected. And so there's just a lot riding on this. And the Democrats know if they kick the ball and they lose, then they lose. And they don't just lose this election, but they lose, whatever they believe in, and their exact policies and their terms are just going to get knocked off. And so they want to try to lock something in before, they possibly lose, any control that they have. And so they're going to push it to the very end. Republicans are going to say, hey, you know what? Let's just bump it a year because we're pretty confident we're going to get it. And that's where they're standing. No matter what they do, they're going to draw it to the very end. And neither side is going to win if they pull off the same thing they did last year. And, it may even get worse. And that's not including, in the next 8 weeks, we have the big, package that's supposed to come out from Europe on how they're actually going to stabilize everything. So, again, short on details, long on, promises. And so there's just a lot of fundamental things riding in the economy right now. And just be really careful. July is historically a bullish month. On the seasonal tendency. Usually it does go up. Now, it is the weakest of the historical seasonal bullish month. So it's a very small bullish month. And a lot of times it leads people into, hey, we're in a big summer rally. Summer rally's coming. Summer rally's here. But what usually happens is August and September are usually a couple of the worst months. And, of course, crashes often happen in October. So, if you just think back to all the major market crashes, you're pretty much, 08, Black Friday, you go back to the Great Depression, all those main crashes really started happening in October from sell-offs that began in August and September. So just be real careful if you are looking at taking long positions. Be mindful that we are at a major resistance level, and we have just hit this in recent weeks. We hit it last year, and, it's been just a very strong psychological level that, the spiders, the diamonds, everything's really been stuck in. If we go over and we look at, we can check out the Qs and see how, they're comparing, just looking at the daily trend and how that's been going. They have been doing really well, and the techs have really been leading, I guess, the pack, you could say. The NASDAQ's been leading the pack across the board, and, it is making highs, but at the same time, it's also setting up for a possible, head and shoulder, pattern. I mean, it's really, who knows how this is going to go. It may actually be trending up. Earnings is going to be a big part of that and how the earnings play out. There are a lot of earnings announcements coming out. Obviously, we're in earnings season right now. And, as I mentioned last week, I said, hey, get ready. Earnings season's coming. And the reason that you want to be aware of that is because mutual fund managers, this is one of those fundamental and seasonal factors that you always want to be aware of, is mutual fund managers are measured according to an index. And since they're measured according to an index like the S&P 500, they're expected to basically meet the expectations of that index. And, if that index drops 10% and, their fund drops 10%, no big deal. But if the S&P goes up 10% and their fund only goes up 3%, then they might be looking for a new job. And so they're not so much afraid of losing money in the sense of, if the market goes down, it goes down. They're not trying to be directional, as they are in not making money whenever the market's going up. And not knowing what announcements are going to come out with earnings, and that being a big driving factor, they will often start allocating more of the resources of the fund, a higher percentage of the money towards the funds right ahead of the earnings cycle. Also, last week, we had a couple other things going on. We had the payroll cycle. And if you take a majority of the earnings in the Dow, nearly, I want to say it's over 95, 97% of the up moves in the Dow have actually happened during around the 1st and the 15th of the month. And that's because what happens in the United States, people get paid, right? And when they get paid, their money automatically goes into 401ks, goes into mutual funds, which goes into stocks. And then when you combine that with a Friday, you get a larger up move because you have Friday paydays, you got 15th paydays, and people are like, well, the 15th was on Sunday. Exactly. But most people, when they get paid on the 15th, actually get their direct deposits, their money going in on that Friday. And so we actually saw that payroll cycle actually starting to take effect right here. It sort of stopped the down move, trended in, and kept going up. We also had the earnings cycle happening at the exact same time. So all that happening at once to push the market up. So just don't get too, bought in to the up move. And, if it does break a level, it's going to have to really break quite a few levels for it to get up there. And really, there's no good reason for, it to do it. The economic indicators are not great at all. Bernanke, on his own testimony, has said basically everything's looking bad. They're lowering, GDP expectations. They think next year is going to be even worse. They don't really see unemployment improving that much. The European crisis is far from over. And, companies are, the ones that are doing well are, they're getting really good at, which is, really the cycle that any kind of, recession, whatever you want to call it, goes through, is companies get really good at, cutting expenses. And like Goldman, they cut a bunch of employees, and oh wow, they lowered their salaries. So that was money that they saved. So they just get really good at cutting expenses. And so we can go over and we look at different markets. We can check out always back up. That's one thing that I see that traders sometimes do. You get so involved in the intraday cycle that you forget to stop and back up and look at what's the overall trend. Is there something I should be aware of? And, like if I was trading, the S&P 500 and I'm going in and I'm looking at, the spiders, I'm like, wow, this may be a major support level, right? So, or resistance level here, and so if I go over and I want to pull up the futures chart and we'll load that in. And I'm going to see basically the exact same thing here. Let me clean this up for you. And, so I did a bot over there, and but I'll get rid of this. Let's see, data series, and we'll get rid of all that. Make it a little cleaner for you. And, we're right at this exact level. And, there's different things I can be looking at, but that is one of the big things. I'm like, I may be pretty close to wanting to take some profits or tighten my stops. And, we go over and we check out, like 5-minute bars. So we're going to see the same thing. Market got right up to that level, and what it do? It just flattened out. Okay? So we're going to be right back. We're going to go over some more stuff. We're going to go into some more seasonals and talk a little bit about natural gas, the Swiss franc. We're going to talk about T-notes and things like that. Anyways, join us right back after the break, and we will talk to you soon on the other side. Stay right there, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Laurie Pesavento, Victor Jones, or Darrell Martin, hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back to the Diagnostic Trading Hour with Darrell Martin here at TFNN.com. And we want to go over, now we were looking at the spiders, and we were looking at the S&P 500, and just checking how we're at basically a very, crucial resistance level, and that there needs to be something to really break it. And obviously, Bernanke's testimony did not do that today. And earnings, did help the market rally, but at the end, still have not pushed up the market into, great new record-setting highs or anything like that going on. And so what we want to do is look at, based on what happened today, what could you have done with the Nadex trade, expecting that if the market were to rise, okay, based on just, the uptrend that we're in, the seasonal cycle, the earnings announcements that came out before the opening bell, all those things, expecting the market to rise, how could you take advantage of that on the Nadex platform? And so what you're going to do is if you go over and you log in to the Nadex platform, then, literally just like I said, go right over here, click on log in, and then you can get right into your account. It's really quick, really easy. And I'll log into one of my demo accounts over here. Let's see. And after you've logged in, so if you haven't logged in, log in right now to follow along with me. After you've logged in, then you want to go in and you want to pull up the US 500 spread. Okay, so what we'll do is we'll log in and we'll pick that out. Sorry, I've had to redo that. So once you log in, go here, click Save and Continue. Oh, by the way, this is a really important thing. Make sure you check out the rollover announcements that they do. So when they say crude oil futures symbol rollover, it'll say that this will be effective Monday, July 16th. So that means that you need to make sure you're looking at the current contract for crude. They're saying that you need to be looking at the September crude futures contract as the underlying market when you're trading oil on Nadex. So always pay attention to that. Also, they talk about the Japanese holidays, and that can of course affect the markets as well. And so it's sort of a nice reminder for you. It's like, hey, you know what? Japan's going to have a couple holidays, and you want to be careful on that because that's just anytime there's a European close or an Asian close, American holiday close, that's going to lighten the volume up a little bit. Anyway, so close that down. We go over here, and we're going to check out a couple different trades of what we could expect. One of those is we're going to check out the binaries. And we're going to go over here to US 500, and then we're going to go over here to daily. Now, on the daily trade, we can look at, okay, where was the market? The market was right here at 1354, and we had an expectation that the market would get up somewhere around, 1370 over here, based upon, just past numbers and how the market's been performing so far. So let's see here. If we look that up, then we can pull in. We can go back and look at it. If you basically pull the daily bars up, then you can see why we did expect it to get to somewhere around 1370 today. So right there, that's basically a very realistic expectation. So on that, we had that expectation of somewhere around 1370, maybe a little bit less. What could we have done? Well, let's check this out. This is 13. That has to be above 1370, and this is a binary. So on this binary trade here, we're saying the S&P 500 September contract will close above this price, 1370 or 1367, at 415. And so to see how that trade could have played out, you go over here to the chart tab. And so we're going to pull the chart up on the 1367 binary. So that way, because we'll give ourselves a little bit of room. And when we look at that, we go, okay, well, what was it trading at, at 9:30, this morning? And we can see we could have bought the trade literally somewhere around $10, okay? So we could have went in and bought the spread, the binary for $10. And right now, it'd be at a value of $63.50, okay? So you could get in that trade, and you'd have a substantial profit right now. Now, you could wait till expiration, and as long as it remains above the price of $13.67, then you'll actually realize your full profit. So the full profit would be the difference between where you bought it and $100, because all binaries are $100. So if we were able to get in and buy it for $10, then the profit potential would be $90. So if I bought 10 of them, I'd be risking $100 for the potential to make $900 if we're able to get up to this point. Now, I don't have to wait. At any time as the market was rising, I could, for my $10 investment, I could have sold out at 20. I could have sold out up here at 30, 40. I could have sold out again over here when I got up to 50. And I could sell out, right now at 60. So that's how you could have used the binaries in the morning based on an expectation of looking at, okay, fundamentally, with earnings announcements and, everything, the earnings cycle, technically with, having a major resistance level. So the market's going to be attracted to that level. So, and why is it going to be attracted to that level? Because there's going to be a lot of orders there. There's going to be people that have, there's going to be short sellers. They're going to have orders to sell there. There's going to be buyers. They're going to be ready to get in if it breaks out above that level. So a lot of orders are going to be there. You're going to be confident it's going to go to that price level. When we come back, I'll look at the spreads and show you how to take advantage of it using the Nadex spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back to the Diagnostic Trading Hour with Darrell Martin at TFNN. And what we're going to go over right now is just looking at the market's basically stalling out. And, this would be a point where, this was your expected price level. So if you were in this trade, if you were trading the binary, this would be where you'd probably be looking to take a profit. Yeah, you can wait until expiration. Yeah, you will make more money, but you only risk 10. You're already up, $60. So that's a 600% return on your investment in, one day. So literally in a few hours. So, you might want to just go ahead and be happy with that and take that profit. And, if you did $100, obviously you're up quite a bit. So, just, take that profit, enjoy it, and have money to trade the next day or look for another trading opportunity, such as maybe you think the market's going to retrace down, things like that. So when we last left, we looked at, an option on how to trade the binaries using the Nadex platform. So now what I'm going to do is go in and look at, what if you want to trade a bull spread on the Nadex platform? Well, if we want to hear the indices bull spreads, we went over to US 500. Then, there's, quite a few options that we could have chosen. And, the idea being that I think the market's going to be trending up over the course of the day. Then I want to make sure I find, opportunities that I think really fit that time frame. And so when I go over there, and let's see here, we'll click on the US 500, and we will click on the time frame here. And then, of course, we want to look at, where was the market trading, this morning. So when the market opened up, so if I'm looking back on the day, then the market was going to be right around, 1350 or so. All right. And, if I went back up and get even more detailed, I could, again, break it down, look at 5-minute bars, and go right into, 830, Central, 9:30 Eastern there. Yeah, 13:55. And so I have, obviously a lot of different trading opportunities I can check out. I'm always going to want to usually look at the two big ones first, is what I like to do. So I like to look at the 300 to 400 point ones. If they have the same like floor or ceilings, then like if I'm looking to buy, so in this instance, then I'd be over here and I'd look at, okay, well, what do we got? We have a 1355. Here I have a 1360. Okay, so I'm probably going to be more interested in this one just because it's going to have less risk for me. So with that in mind, this would probably be the trade I'd be checking out right now. And as far as, if it was in the morning. So I go and I pull this trade up and I look at it, and I can look back and see sort of how would that trade have worked out this morning if it was the trade that I would have chose to do. So we'll back out. We'll look at, let's see here, 10 minutes, see if it'll load all the data in there for us. And there we go. And let's see here, maybe I had the 1355 to the 1385. Yeah, okay. So 1355. Pull that up. We'll make our chart bigger. That will help. And see if we can zoom out. So it started to pull back. So we see the price got up this morning up to like 1370. Very in line with where we actually saw the market over here up to 1370. Okay. And if we zoom out a little bit on the chart, if I can get it to zoom out for me, then what we'll be able to see is that we could have gotten the trade, basically, sorry, it's not pulling back for me right now, but you could have gotten the trade somewhere around 13, my guess is based on just the intrinsic or extrinsic value, you could have got in around 1357, 1358 on the trade and had that profit and be able to write it up. What that allows you to do, if you go in and you trade a spread, if you go in and you buy the spread and you're writing it up, it's basically like buying the S&P 500 futures, and the fact that it's mirroring the underlying S&P 500 E-mini futures. And whenever you go in and place one of these trades, every tick right here is $1. And so when it moves a $1 move, like from 1367 to 1368, okay, that's a $10 move. Well, on the S&P E-mini futures, that's a $50 move. So if you're wanting to basically trade the S&P 500 but have maybe like a $100 or $200 risk on the trade and not have to worry about getting stopped out in case there was some volatility from Bernanke or whatever, you could go in, you could place this trade first thing in the morning, you could put on 5 contracts, and that'd be like buying the S&P 500 future but without fear of getting stopped out. You'd have till the end of the trading day to be right. And so if you bought it at, say, 1358, then you'd actually be able to be up quite a bit right now. And if you're at 1358, you can actually, let's see here. If I did this and I bought at 1358, then, and I did 5 of them, okay, then what that would show me is my risk would be $150 on the trade. That's also my margin. If I was doing futures margin, I'd be putting up at least, $400 or $500 depending upon who your broker is, right? So only $150 in margin to control, a product that's worth over $60,000 and $150 in risk. So it's not like I have this double leverage margin where it works in my favor and it works against me. It's only $150 of risk, but I can make up to $1,300. And so basically right now I'd be up, approximately, give or take 10 points depending upon when we got out. So on a 10-point profit, that'd be a $500 profit on a $150 risk. It's a 300% return. And some people could look at that and they're like, well, wait a minute, didn't we have like a 600% return over on the binaries? Yeah, we did. The issue is the spreads are going to mirror the underlying markets. And so, if the spread expires, at all, like doesn't get all the way up to our profit goal, because our profit goal was 1367 on the binary. If the binary doesn't get up there or expire above there, then we could actually lose the entire risk capital, depending upon when we get out. But on the spreads, it doesn't matter really where we get out. We can get out anywhere along the way. It could expire at any price in between where we got in and where we got out, or where we got in and higher, and we would actually have a profit. On the binary, you'd only have a profit if you got out before it expired and it had increased in value, or if it expires above your level when you bought it. You would not have a profit if it expired below the level when you held it to expiration. So that's really a big advantage that you can take advantage of with the spreads, is you can really use them to mirror the underlying markets. So with that, that's basically a trade setup that you can look at for doing, on the S&P futures. And, right now you could look at a setup of, hey, the market could easily do a 50%, retracement. So you go on, you throw in your drawing tools here. We're going to bring up our Fibonacci retracement level, and market's just been running up. And now it's time to go and fill some stop orders. They're not really seeing anything happening up here. And so with that, this actually looks like a pretty decent level right here based on where the pullback was and everything else. You can easily see the market come back to, possibly as low as 1360, 1361. Just for, midday retracement. May end up higher or whatever. They may come down and try to push it up one more time. But any one of these levels, 1366, 1363, 1361, 1362 there, those would definitely be, decent levels to look at a pullback to. And so you could have went in and the same spreads that you're buying, you could look at selling. And you'd want to, of course, look at this right here. So 1370 would be the one you'd want to be checking out because, that's when we're up here at this stall level. That was our profit level. So as soon as you hit your profit level, if you think that's a resistance level, then really what you're thinking is the market's going to drop after it hits that level. So if I went in and got in that trade, and let's say that was right around 1125, then we pull up, and hopefully this chart will pull up for us there. And so right here this morning around 1125, then I could have got into the trade, let's see, around 1367 or so. And depending upon what time zone you're looking at. And so that would have been 1367, and right now, it's moving down 1366, 1366.3. So as it's moving down, the yield will make money out to the downside with a target profit of moving down to about 1361. And if you're able to get it at 1367, then we can look at, what would that risk be if you would actually got in all the way up there. So here, we'll actually pull this one up. If I would have sold this one, and I would have sold it up at, let's say 1367.5 on a quantity of 1, and then we'll go in and we'll do, say, 5 of them. So $125. So if you started off in the morning with a $150 risk, and then you made, $450 in the trade when it moved up to 1370, you got out, and you decided you flip around, now you're going to sell this lower spread, really the middle spread contract here, and that has a ceiling at 1370. So, because that's where you basically think the top of the market is. So you now decide to sell into the rest of the day. So you've taken your profit on your first trade, you've removed the $150 risk you initially had, you've locked a $450 profit in. Now you're going to take $125 of that $450 and place a short trade to go the opposite direction on the market. That gives you a chance to now profit in both directions on the trade. Basically a swing trade at the market as it moves up and down. So with that, what we want to do is we want to look at, okay, well, what are some of the things coming up? What are some of the trades that we could possibly, think about, placing in the future? And, well, tomorrow we have unemployment claims coming out. We have existing home sales coming out. We also have the Philly Fed Manufacturing Index coming out. So unemployment claims are going to come out at 8:30 a.m. Central Time, so 9:30 Eastern. And one of the sites that I really like to use, I think is really helpful, it's free. And it's a great trader resource, is this calendar right here. It's just forcefactor.com. Go to calendar. And on here, you'll actually be able to see all the upcoming news announcements. And you can use this to find, different information, such as what are the expectations and, what's the previous, reported number. And you can even click right here to actually see past performance. And so you can see, like last week, they actually had too high of a forecast, and it was lower. So they may be setting it up for the same thing this week. The week before that, they had too high of a forecast, and it was lower, which is good. So that means less unemployment claims. And so you can see that right there. A couple other things that are really helpful is you can go over and you can actually click directly to the source of the news announcement. So right here, like latest release, and it'll open that up for you. You can check that out. And you can see, when is it released? What's the actual cycle? What's the next release date? And then you can even have some notes on, why you should care. Another fun thing that's on here is if you're looking for different trade setups, different trade possibilities, especially if you're trading Forex or Nadex Forex, okay, so you can actually do the spreads or the binaries on Nadex, then they have what's called basically a seismic quick indicator over here. And you can click on this and you can actually see on this news announcement what was the impact on different currency pairs. And so what currency pair had the biggest impact? And looking at this right here, we can see the biggest impact was the pound dollar and the U.S. yen. So the U.S. yen being 0.8 and the pound dollar being 0.8. And I wouldn't get too into this in too much detail. Basically, it's just saying it had the most volatility due to the last movement. And you can go in and you can check out past ones. So I can look at the previous one and which ones had the most and see if there's any kind of consistency. And we got pound dollar again. So that I like it whenever I see, obviously the same pair popping up a few times in a row. and it'd let me know, okay, that's probably, one of the ones, pound dollar, again, very ranked very high. So based on that right there, I'd probably be looking at the pound dollar as if I want to do a forex trade around the unemployment claims number, then that would be the one that I'd want to do, is the pound dollar. And so now I could go over, and in the morning, you can log in and you can go over here and you can pull up your forex bull spreads or your forex binaries, either one, and you can go into pound dollar, and then you could look at, there'll be earlier spreads, so you'll obviously be able to find ones that are expired just 2 hours from now. And if I'm doing a news trade, just a purely news-based trade, I'm probably not looking for the trade that goes all day. I'm probably looking for the 2-hour trade. You definitely could take a position if you had a reason to take a position, but I'm probably just going to be looking at that unless I see something different on the charts. So, speaking of the charts, let's check out the charts for the pound dollar and see what we come up with on that. So if we go in and we're going to pull up the pound dollar, and I'm also going to pull up a longer term chart here, so that way we can check out other possibilities that might be good for us. And so we got the dollar, pound, dollar. And we're going to look over here at the daily chart. And we're going to see sort of an interesting setup, a similar setup right there. Is that, this taking place is that we're coming right, it's always like the S&P with that drawdown, right, and this move back up. So it could easily be set to take a down move if the unemployment claims comes in worse than expected, and there aren't too many earnings announcements. That's going to be a big key, okay? Keep an eye on your earnings announcements. If there aren't too many earnings announcements that, don't overshadow it, then, we could easily see a retracement right here in the pound dollar. So you could then go in and look in, and, I would, even looking at this right here, we just hit the 50-day moving average on the pound dollar, and it stalled right there yesterday. It stalled right there today. So definitely a possibility for a short trade. And so now that we have an idea, okay, we have a short trade, we know what time we want to do it. We want to do it right around the earnings announcement that's going to come out in the morning. Or not the earnings, but the unemployment claims that's going to come out. We're going to come over here, we're going to go to pound dollar, and we're either going to look at our daily, or we're going to look at our 2-hour spreads, or our daily binaries. So if we look at we'll just say 2 hours, we'll just act like this is where it's at right now. Then I can go in and, find 1.650 is what I'm going to be looking for, something pretty close to that as far as the ceiling goes. And so as I go over and look for that, so like this right here would be like the perfect, the trade that you'd be looking for. It's going to have very low risk on the trade. There's an $8 risk on the trade. There's a $142 profit potential on the trade. I could go and I could do 10 of these. I'd literally be like selling a full lot on the S&P, or not on the S&P, but a full lot on pound dollar, so 100,000 units of currency with only an $80 risk. So it's an 8-tick move, and you have until expiration of that trade to be right, and now you have a trade set up to go into before the news announcement. A tip for you, I would definitely hop on probably about 10 to 15 minutes, if not 20 minutes before the news announcement, and go ahead and get your trade set up ready. Because the volatility, of course, will increase as it gets closer and closer to that trade. It'll make the premium more and more expensive. Another tip, something that I really like to do, is after the news announcement comes out, let that first couple minutes, that boom, like basically the first 3 minutes, okay? And let those first 3 minutes just do their bounce. See what the announcement is, and then place your trade. So, and that gives you sort of time to go with the market without having to be before the news announcement. So you can pick before or after. But pound dollar definitely be a setup I'd be looking at to go short tomorrow morning before the news announcement using the Nadex pound dollar spreads as an example. All right, I'll see you right back after the break. Hold on right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the Diagnostic Trading Hour with Darrell Martin. And if you have any questions, definitely feel free to call in. And that's TFNN, 877-927-6648. Again, 877-927-6648 with any questions or any comments on the market. Anyway, so to look at a few more seasonal tendencies, some things that you can check out. Natural gas, obviously, is hitting the lows here. Demand is going to start picking up. We did have a cooler month. It's cooled some things off, but it's going to start picking up based on just the seasonal cycle. And you should expect this uptrend probably to continue on through, I'd say, at least October, where the supply will then be bought up for what's needed for the winter months. And so, definitely be looking for that uptrend to continue. I doubt that's going to be a short-term trend, and we ought to see that literally continue to rise and probably see a profit target of at least 4.5, if not 5.5, by October. And a couple other things you can look at. You can go over and you can look at the U.S. franc, and the U.S. franc, the Swissy, is basically setting up on its normal pattern here. Let's go ahead and pull this out to daily bars. And there's a lot of stuff going on with it, but definitely there is a pattern. You can look at daily, you can look at weekly. and you can see just different trends that it usually will exhibit. And on this trade, if you go in and you are looking to, usually buy the trade somewhere around, in July, late July, and, holding it, pretty late, then there's a lot of possibility that the market will, sell off right here. And, you had the U.S. franc, and there's, let me pull the exact details up on the trade for you. Let's see here. If you go in about, August. So that's really when we're going to be looking for a big up move. And you want to go long on the Aussie dollar. So just keep that in mind, that we're looking for a pullback, okay, right now on the U.S. franc. But we'll be looking for the market to move up seasonally in August. And usually it'll carry forward till about the middle of October. And that's actually had a 70% winning rate over the last 37 years. So, again, that's getting in somewhere around, the first week of August and around the middle of October. You can go back and you can look at historical trades. There's 1 year it really got messed up, and that was actually last year. But that was really due to something very simple. It was due to the fact that the Swiss bank intervened in its own currency. And, when the Swiss bank, says the central bank says, we're going to intervene in our currency, then that's a good time to, get out of the way and let them do their thing. And I'll bring up more details on that trade probably in our next shows because it's coming out a little bit later. And a couple other possibilities that are coming up is if we look at the treasuries. Now, these are going to be really illiquid right now, so be very careful if you're looking at these trades. But again, just to give you some other seasonal trade ideas, okay, is if we go in and we look at you could look at the 5-year or the 10-year, and you can just see which one has more liquidity that you're more comfortable with. And both of these have absolute, like I said, there's no liquidity over here yet, okay? And notice right here, no liquidity yet. But right here around, the next week, we ought to see liquidity start spiking up on these markets. And the seasonal trend is that you get in somewhere around the end of July and hold it to about the end of September. And if you would have done this trade on the notes, and you'd be literally looking at a pretty decent profit. So you'd only have one loss in the last 20 years, and you would have an average net profit of over $3,000, and with a drawdown, let's see, the maximum drawdown on the trade would not have actually been greater than $2,000. So an average net profit of over $3,000, maximum drawdown at $2,000. So you can set your stop loss at $2,200, $2,500, whatever you want to do there, and put this trade up. This is a seasonal cycle that happens year after year on the Treasury, 5-year and 10-year notes. Anyways, that's all the time we have for today. I look forward to talking to you tomorrow. We'll go into some more seasonal trades, some more seasonal examples, and really just drill home and how to use seasonals to your advantage in diagnostic trading. All right. Thank you for tuning in to the Diagnostic Trading Hour with Darrell Martin, where traders come to learn how to maximize leverage, minimize risk, and be one step ahead of the markets. We'll see you tomorrow.